Hello, hello. Can you guys hear me? Okay, so I see there's some people in the room about
Hello,
hello, hello everyone.
good afternoon.
Good to see everyone. Well, there's only about eight of us, but for now, but that's a good start, and we'll see. This is our first Zoom session, so we'll see how it goes from here. Um, you all know me a little bit. I'm Victor. Let's see. We have I don't I mean I see your guys' names, but I don't really know you guys that well. Let's maybe quickly just get to know each other a little bit for fun. So who do we have here? We have um go ahead we have Joe Joe. I see we have. I don't know your last name, but
So you're talking about me because the
yes.
first name is Yuri.
Yes. Uh
Exactly.
nice to meet you, Joe. Okay,
Yeah,
good.
so nice to see you in person. Um, I've been a amateur investor for like 30 years, following the markets, playing around with Forex, options exchange, and also stocks. So for me, it is a side hustle.
Ah, okay. Interesting. Well said. All right. And next we have sorry, I've been at Zoom meetings, but this is my first time hosting one. So please excuse me if it's um a little rough around the edges, but I'm sure we'll get the hang of it. Okay, so we also have Fred Hardy here, yes?
Yes,
Ni
yes.
Nice to see you, Fred. You want to say a few words
Thank you.
about yourself if you'd like, please do. If not, it's up to you. It's uh whatever
Okay.
you want.
Well, let me just add a couple of words.
Okay.
I've been primarily just a long-term investor, looking for things that would provide a good retirement and so forth. And because I've long past retirement now, I've become fairly conservative. Um, I got burned using options some time back. Um, and
Uh-huh.
as a consequence, been pretty leery about doing it. But I recognize the value of doing selling calls, for example, and
Yeah.
you apparently do it very effectively. And I'd like to understand that better.
Okay. Um, uh, Fred, if I could just ask, you said you had a challenging experience with options before. Can you just what kind of options were they? Were they put options, call options, all different other options?
Uh, Well, basically, it was that I have a fairly large Apple stake, and it's been very good to me over the years. I ended up selling calls, about 500 shares, and unfortunately, the advisor I had really, in hindsight, didn't understand options at all. He ended up recommending having a strike date that was like 6 months out, and
Oh, wow.
well,
Okay.
anyway, so the long story short, and of course didn't know anything about buying the calls back, and so I ended up basically hanging on, and Apple went up, you know, a huge amount during that period of time, and I ended up basically losing a lot of money as a
Yeah,
consequence.
you didn't make the money that you should have made. I had a very similar
Correct.
experience a long time ago with Apple too. It was back in I think like around 2006 or something when I first started getting into Apple. but I did have a similar experience in the beginning, but then I kind of corrected it, and the position straightened out. So I hear you there. There can be some challenges, especially if you are going long term and picking a strike, an expiration date that's far out, and then you have the stock price going way way above the strike price. So I hear that.
Mm-hmm.
Okay, all right. So we have more and more people joining us. All right, so let's maybe okay. So we also have we have Larry here, and let's see, and we have so we have quite a few people joining us now. We already have 11, 12 people. Cool. So let's maybe get to some questions, and we could maybe do a little introductions as we do questions if you want, or we can just discuss some, just get right into it and discuss some option strategies. But I'd like to have a live discussion with you guys, and maybe have some questions thrown at me, and I'll just kind of get to them in real time. And today we'll be discussing covered calls and the collar play, which is primarily what we do which is primarily basically what we do in our portfolio. So yeah, those are the only ones that the only plays that I record. And okay, so does
So Victor,
yes.
this I'm a relatively new member, so I've been seeking alpha for a few years, and I've been following your article for a while. But I kind of just try to for the benefit of other new people, like what is like your main investment strategy? Kind of are you value, momentum, or technical? Like I mean, can you tell us a little bit about your general investment philosophy? Like that would be
Ab-
extremely helpful. You know.
Absolutely, yes, that's an excellent question. So um I
Sorry
like
if it's like kind of boring for some people, but
no, I
for
think
me,
I no, this is a great question. So I it could be boring for some people, but it's still a great question, so of course I'll answer it. So I like of course companies that have a lot of growth potential, but there needs to be some kind of value in sight, basically. Again, we have core positions in the all-weather portfolio, and these are the positions like Amazon, Google, Palantir, and several others that basically, I guess I want to say I have a lot of confidence in these companies, and I have a lot of confidence that they will appreciate considerably in the long term. I know that there's a couple of Chinese ADRs, and some people may have may question this approach. Nevertheless, I do see a lot of value in companies like Baidu, obviously, and Alibaba. There is a bit of increased risk in these names, just because of the some of the political risks and the geopolitical risks, and the possibility of China-Taiwan conflict. Obviously, that would not be great for for stocks or the world in general. So but nevertheless, I recognize that China is a great economy. It's a great country. These are excellent companies, and I wanna be invested in them. And like like I've mentioned in articles and before, if you're concerned with the ADRs that trade on on the American exchange, you can actually buy most of these stocks on the Hong Kong stock exchange also. It depends on which broker you're using, because of course not all brokers provide access, but I know Interactive Brokers does in many areas. So that could be a viable option to kind of take some of that risk away from the China play. So yeah, that's basically it. I look for excellent companies that I see a lot of potential in, that will, that have some kind of unique product. Like obviously, iPhone is a great example, or Tesla is a great example. That was a battleground stock for a while that I was very bullish on, and people were bearish on it for a long time, but it prevailed, and I think Tesla will continue to do well. Obviously, there's going to be corrections and things of that nature, but it's an excellent company, and it's a market leader, and that's also what we like. Market leaders and kind of monopolistic style companies are good to have. And this is kind of like people often ask me, why, Victor, why do you own Palantir? What's it's risky, and it's expensive, and there's lots of questions. There's stock dilution, things of that nature. But basically, it's a monopolistic style company, and it's got it doesn't really have any viable competitors that can provide uh, the whole the whole package that Palantir provides, the whole the whole uh, basically all of the services in one company. Palantir does it best, and I think it's going to continue to to gain market share and continue to appreciate its stock price. So basically, we look for companies like these with unique products that can that can make the stock prices go a lot higher. I hope I answered your question, Chan. If not, please elaborate, and I will dig deeper.
Yeah, perfect.
Cool.
Yeah, yeah. Thank
Okay.
you so
Good.
much.
You're welcome. No problem. Okay, so let's get to some more questions. Who else has a question? Yeah, you guys can just can go ahead and unmute yourselves and just go ahead. If
Yeah, so I have another one, Victor, for you, and that is so Yuri here. So like I said, for me, this is more of a side hustle, right? It's just I have a limited capital, but I compare it to your all-weather portfolio because I'm investing only around 50K or something. So when I'm looking at my own positions, each position is sized what, $1,000, $2,000, right? It's just to be dispersed and then have a good coverage. So looking at these covered call plays makes it rather difficult, because usually one contract is easily 100 shares, right? So it makes it raw. So I just want to learn from that perspective, to what extent can I, with this limited budget, although 50K is less limited, but still, how can I follow along, right, with those kind of strategies? I think it's my learning objective for today as well, to see how can I benefit from those strategies, because well, like I said, I don't have 750 Tesla shares, so
right, I
so
understand.
that is my burning question, so to speak. So
I
because
understand.
and just as a side note, so I also do a lot of individual option trading, so spreads and iron condors and stuff. So I'm looking into those. So I
Yes.
not necessarily use it to hedge my equity portfolio, but it's just, I like to see how I can use it to my benefit. That's the thing. Yeah.
All right. That's a great question. So I don't think that it's so much about how much the size of the account. It's more of a discipline thing with covered calls. Um, and it's also important. I don't want to use the word timing, but I will. It's also important. It's also the timing is very important, because obviously if you have like a raging bull market, or you have a stock that's that has a strong potential of appreciating rapidly in the near term, you don't want to put obviously you don't want to limit your upside, as we discussed uh with Fred, I believe. So obviously we don't want to just throw them on everything. We want to be selective. So fortunately we're in like this kind of sideways market. Well, it's not that fortunate, but and it's not that sideways. It's actually very choppy, but these the covered calls, they work best in a sideways to a slightly upward market, or with a stock that's basically moving either sideways for like a limited period of time, or has like a slight upward trajectory, or if it also as a hedge, if we have a slight drawdown in the stock or whatever, any kind of a decline, uh, the covered call will cover some of the losses, and also we can layer a put on top, make it a collar play, and this way we can benefit more if a stock corrects sharply. But that's even more difficult to time. That's the collar plays. So but they do provide excellent protection for when the market moves sharply lower. So to get back to your question, I understand that everyone doesn't have like unlimited capital, but it's more of just I guess a routine thing, of something that you get used to having as a tool, as an investment tool in your portfolio. Because obviously we need, we can use all the tools that we have. It's beneficial to use all, the more tools we use, the better. So obviously we have we have like technical indicators, fundamental analyses, and things of that nature. And then we also have these options tools that we can implement to increase yield in certain situations. So basically that's it. And a good thing about the covered call option strategy is that you can buy the calls back. Like say for instance, you have a stock, whatever, XYZ or Tesla, you like recently I wrote a 170 call on it, or actually before then I wrote like I think it was a 180 call, and the stock dropped. The call option, it basically lost like 90% of its value. So I just went ahead and bought it back. And I do this routine, it's basically a routine for me. If I have a call, if I sell a call option on whatever company, and we have basically the options, they degrade quickly, so you can buy them back at a very reasonable price, and then you can go ahead and just go ahead and write that call option, a different call option, or you can just take it off, and if the stock is about to appreciate, and you don't have a limit then.
And you usually go for next month, right? Like a 35 day
Yeah.
kind of expiration, right? That's what you
Yeah,
usually do.
you don't want to have them on for too long, because obviously a lot of things can happen. You know, you don't want to you don't want to get stuck with the
Wow.
options, because if there's a sharp fall, and with the stock, I mean, and also you want to avoid situations where you limit your gains. So yeah, I basically I keep it's usually 30 to maybe 45, like 60 days is max. I don't do I don't do the covered calls more than 60 days. Sometimes I will do it in some situations, but basically I like to keep it around like 30 days. And even the shorter the better. If there's like an earnings coming up, an earnings situation, those options are going to be more expensive. So and the expiration date, you can choose an expiration date that's closer, like right after the earnings, if you want to play it that way. Like, if you want to put a collar play on, if you think the company is likely to miss earnings, then we don't need to go out that far. Or basically any kind of significant event concerning like any company will provide basically decent yields, and you don't even have to go out 30 days. It can be like 2 weeks or so.
Yeah. And another, so I'm taking time here, but
Yeah,
it's
that's fine.
it's maybe more technical question. I don't know how everybody else is, how deep everybody else is into this, but so if you're looking at these, let's take the Tesla example as a strike prices. So we currently go at 171, 78. So I'm looking at the chain there. What kind of delta strike prices are you looking at usually? Are you just kind of, I'm sorry to say it like that, Victor, but are you kind of a gut feel, okay, I'm looking for 175 or 180 strike price, or do you more technical, looking at the deltas and then see there is a sweet spot for you? How does that work for you?
Yeah, so basically I'm looking at the chain now. So for Tesla, here I would so if we look at June 16th, yeah.
I was like looking at exactly the same one, so that helps.
Yeah.
Yeah.
So
1 month
basically
difference.
we can go basically here we can we can go with like a 175 for $8 here. That's
Yeah.
that seems reasonable. But that's only, but that's only if we believe that Tesla is going to be, around 175 in about a month from now.
Yeah.
Right. We don't want to put this play on and then have Tesla be, at 200 a month from now, because, we'll be kicking ourselves. So what I would do in this case is what I did in the all weather portfolio. I did a partial position, like a covered call on 1/3 of my Tesla position, just to, get some extra yield. And then, if the stock proceeds higher, then
Quickly
that's
done
fine.
that.
I'll just let
Yeah.
that 1/3 of my position go at the expiration date. I have no problem with doing that.
No. Okay, gotcha. Thanks for that. Yeah.
Hi, Victor. This is Rory. Can I ask a question, please?
Yes, of course, Rory. Please
Thank
do.
you.
And nice to meet you.
When setting up your covered call position, do you look for an overbought situation, either in the market or in the stock, which could limit that upside on a technical basis, or do you just get a feel for some potential downside and then you write your calls? What is it that actually drives you to make that decision?
That's a good question. That's an excellent question. So it's basically every situation, almost every situation is different. It's really, I guess, more uniform in a way when we have a clear, like a pretty clear image that the market is probably gonna go lower. Like we had last year, we had several instances where it was like pretty clear that, that the market was heading lower. I want to say that we're close to that point here, that we may be approaching like a near-term top. And I know we've been discussing that in the group lately. And we could be close again. The S&P, it's on, or SPX is what I look at mostly, the S&P futures. So we have that critical support, critical resistance level right around 4,200. It's like 4170, 4180 to 4,200. If the market can't get above that level, it's, we're probably going to see some selling going on. So this may be a good spot to initiate some covered calls. Which companies? That's a great question. So I mean that depends on which companies we have in our portfolio. And right now I only have like several covered calls in play. But I do have calls on Square, part of the Tesla position, part of let me get my portfolio up here. So yeah, part of the Amazon position, and yeah, part of the AMD position, and basically a couple more, but that's about it. So I mean, because we're still seeing quite I mean, we're still seeing the Nasdaq moving higher, so I don't want to limit gains there. But yeah, we want to be selective, and also we want to look for opportunities. Like for instance, recently when we saw Palantir take off, and it gained quite a bit, right? It moved from like $8 to like 10.50, rather quickly. So that was probably that was probably a good signal to put a call on, at least, or I'm sorry, to sell calls against at least part of the position. That's what I did, and actually
Do you
part of
have
it.
any technical indicators that can back that up for you? Do you look at
Sure,
anything in particular?
absolutely. So when it comes to technical indicators, I look at, let's bring up let's bring up Palantir,
Yep.
because it recently ran up. Just and you guys know from the articles, I use stockcharts.com for my for most of the charting. I like their charts. So let's see here. Yeah, basically, I watch. I mean, we have to watch volume, because when we see huge volume spikes, like we saw very similar. Like we see a double top here in a. And I'm sorry that I don't have my screen up. I don't host. This is the first meeting. I mean, it's embarrassing, but this is the first Zoom meeting that I've hosted.
Thanks for having us.
Anyways, there's a double top here, or it appears like a double top in Palantir, but we see very similar first volume spikes. So we want to watch for these huge volume spikes. I mean, we saw volume of 225 million shares traded at the first peak in February, and then we saw like an identical 225 million shares traded around the peak. We actually had another up day of lesser volume, and that was a good signal that that the rally was likely gonna take a break. So yeah, of course we look at huge spikes in volume. I also like to watch the RSI when it if it shoots above 70. That's a pretty good signal that that we're getting into overbought territory. But of course it all it also depends on the company, because I had Nvidia in the all weather portfolio. I had Facebook, or Meta platforms. I liked Facebook better. But anyways, yeah, I sold those a little bit early, and the stocks kept going up. That's a little bit of a sore eye to see that, but it happens. You can't get them perfect all the time. But in Palantir, it's pretty clear here how we see the major volume spikes, then we see the the RSI hitting above 70. So these are good points to just kind of take a step back and say, maybe this is a good time to take some short-term profits, or maybe it's a good time to to put a little hedge on CCD, maybe even a quick partial collar play. But that's we'll get into that later. That's a little riskier. But then again, you're taking the premium from the covered call. That's what makes the collar play such an interesting option strategy, that you can take part of that premium, so you're not really I guess risking any of your own capital. I guess it's the premium from the covered call that's going into the put option. But yeah, okay, I'm getting a little off topic here, sorry. But yeah, Palantir.
Good, thank you.
Did I answer your question?
Yeah, thank you very much.
Cool, excellent. Okay, all right, good. So that was I'm sorry, what was your name?
Rory.
Rory, yes, Rory. Okay.
Yeah, sorry, it says Rosa on there. It's just the name that they picked up. God knows where, but yeah.
Nice
Rory.
to meet you, Rory. Thank you.
I'm also pretty new to this group. It's only been 2 or 3 weeks. So
cool. Welcome. We've been actually this group is it's kind of old. I mean, it's old. It's like I guess 5 years already. Wow, 5 years.
Wow,
Yeah.
amazing. Well, I look forward to the next 5.
Cool. Sounds good. Excellent.
As long as you
Okay.
can do at least half of what you did in the last 5 years in your performance, I'll be more than happy.
Sounds good. We're gonna do our best.
Wonderful.
Okay. So who else? Other questions?
I mean, I have another one if no one's got anything. I mean,
Yeah,
the
go
other
ahead,
one,
Rory, of course. And
other
I'm
one
sure
was
I'm sure other people will think of something while you ask this.
the actual option that you choose. It seems to be either at the money or slightly out the money on the upside. Is
Yes.
there any way that you determine which is your best option to purchase? Is it
Yes.
do you look at the Greeks? Do you look at the actual premium versus your stock value? There must be something that appeals to you in choosing an option, or is it various for various different situations?
Yes. That's a good question. That's an excellent
Thank
question. So it's a combination of factors. First, it's you know, there's got to be some intuition involved. And that intuition goes towards basically, I don't want to say guessing, but more like I guess let's say determining. So that intuition goes towards determining whether the underlying stock will remain around flat or go lower in the in the near term,
Yep.
or whether that the underlying stock will likely go sideways or slightly higher. So in the case where there's a high probability that the stock will likely move lower in the near term, I will go for that, right at the money or even slightly in the money covered call, because that's going to be the highest premium that I'm going to get. And then when the stock goes through a correction, falls, drops, whatever, I'm going to buy that option back, usually with pennies on the dollar. And then
Yep.
we'll see what, I'm sure you guys, I record every transaction in the all-weather portfolio, even with the options now. So I'm sure you guys have
Yep.
seen me, initiating and then buying the same options back, because it makes perfect sense. And then we
Yep.
can reassess, and we can, if we see, I guess, all right, we'll use the term guesstimate. If we guesstimate that that stock is gonna remain around flat, we can, or maybe go slightly higher or lower. Then we can open another another option, another covered call option play. We can go a little further out or whatever. We can play around a little bit. Or if it looks like the stock is going to have a strong rebound, we're just going to leave it alone, let it rebound, reassess after that, and then maybe put the covered call on that.
Excellent. Thank you.
Cool. All right. Come on, guys. I'm sure you got some questions out there. There's 11 of you in here. Come on. There's only like 3 or 4 that have asked questions. I see.
I do have another one for you, Victor, and that's
Yes.
that's really towards the future of the portfolio. So as we are going through the trough of the Chinese market, so to speak, I hope it's a trough, right? So we are going. What
Yeah.
else are we looking at, or what else is on your radar to expand the portfolio with? Because I like the way that you have did the picking inside the various sectors, so that's really nice, so to speak.
Yes.
It also feels a little bit opportunistic, and that's probably true, because whatever comes across and it's interesting, let's go for it, which I like. I mean, I don't want to be too much of a fundamentalist there. But any thoughts on any expansion on the portfolio, or do you think that with this recession threat coming up, that you would like to see let's move in another direction? Any thoughts on that topic?
Yeah, you know, that's an excellent question. And the recession, you know,
Yeah,
who knows how, you know, who knows how deep it's going to be, who knows how
if.
yeah, who knows if you know, if and you know, if when and where. So my view on this is you know, it's more like I guess it's simpler. Let's start with the with the tech segment, because that's what we saw peak, that's what peaked first. And you know, maybe some of you read my article. I wrote it like right around the top in 2021. I think it was called something like um something about a major drop coming soon. It was a very popular article. It got like a lot of page views, but anyways, it was like right at the top, I called it. And yeah, so tech had a huge bear market. Basically, I mean, I don't know how else to put it. When you see companies, I mean, when I saw companies um you know, like Google and Amazon declining by you know, by 50%. I mean, that's that's wild and crazy times. Or when you see, you know, when you see Facebook drop by like whatever, drop by like 75%. I mean, it's you know, it's time to buy. I don't know how else to put it. Recession or not, it's time to buy these stocks. So in my view, like recession or not, we've seen the bottom in these names. I mean, we're not going to see Nvidia back at 100, back at 100 or 105. I don't think we're going to see Tesla back at 100. Very doubtful that we're going to see, you know, Meta anywhere near those lows. Same thing with AMD and many other companies. Whether we have another dip from here or not, and I think we will. I think a better way, maybe a better way to answer this is that I think we are going to have another dip in the markets, just because of, you know, of the uncertainty and the possible recession, and how there's a disconnect between what the market expects in relation to you know, to interest rates, and what the Fed is kind of expressing it's going to do. There's a disconnect there that is not priced into the market. So I mean, if the market doesn't get what it, you know, what it expects, and it expects about, you know, it expects you know, it expects the benchmark to be about 50 to 75 basis points lower, um, you know, by the end of this year. Really, I don't think that's not what the Fed is saying. It's going to do. So obviously, there's a disconnect there, and that, you know, could that probably will cause a problem. Maybe we'll see, you know, maybe we'll see how much of a problem soon. But I don't think it's going to be the tech stocks are, you know, they're going to decline with the market. If we see the like the S&P retest the 38,000-3,500 range, or even potentially move to a new low, it's possible. It's not likely at this point, but it is possible. Anyways, it's other sectors that are going to feel more pain this time, because like, you know, the stocks that we discussed, they already went through their bear market. So it, you know, their future declines, they're not going to be you know, to new lows in my view. They're going to be you know, basically corrections and buying opportunities. So that's what I'm looking for. I like technology. It is it's a pretty, I mean, it's a big chunk of the portfolio. So I don't want to get it more I don't really want to get it like over 30% of the portfolio. So I'm pretty, you know, I'm pretty good with where the portfolio is right now. I'm actually thinking of reducing positions with this possible correction that's going to come, you know, that could materialize relatively soon. I'm actually considering decreasing some positions in tech and other sectors. But I will look for buying opportunities as we correct in tech and in other sectors. Some other sectors on my radar. I mean, we have energy names and we have oil.
Mm-hmm.
Obviously, it's in a little bit of an uncertain place right now, oil, and you know we've seen it kind of drip lower, but and also if we have a recession, we could see more downside in oil, and that's going to be challenging for oil stocks, of course. But still, where the oil price is now and where the stock prices are now, we can, you know, if oil goes above 75, we could see some, you know, some good gains in some of these oil, some good, I guess, near-term gains in these oil names.
Mm.
I don't want to speak too much about, you know, what's going to happen if we have recession, because you know, it's not guaranteed at this point, but we'll see.
Yeah.
Other areas I'm looking at, also, I like materials and industrials and materials. In the all weather portfolio, I just have the materials segment, but I also put industrials in there too. So some names, some recent names, Livent, I guess. I mean, it's a recent addition, but it's moved up really well. It's up like, I believe it's up like 17% since getting into the stock just recently. But this is a good company, and it has a lot of potential, and it's cheap, and it's in the lithium industry. So um, I think this one should do really well longer term.
Mm.
Uh, and I'm also looking at some copper stocks like Southern Copper, and some companies that have exposure to, like Rio and BHP. I don't think, like if we have I guess even a whip, like a stronger whiff of recession, uh like the copper, like the material names, uh they're probably going to get they're probably going to get hit again with another, you know, with at least another wave of selling. But I will look for opportunities there as well, and in names like you know, like agriculture names also. Uh, they have I believe they have strong value
Yeah.
in the long term, even though you know, it's been challenging a little bit lately with these.
Mhm.
Also banking. Look at you know, look at what's going on here. We have a lot of stocks that have, you know, that have lost, especially regional banks. Now, this is a little tricky because obviously, we don't know which we don't exactly know, you know, which bank has what on its books, but we can maybe um, start looking at some names, and perhaps just consider some very oversold stocks. Like for instance, I own Key Bank in the portfolio. It's my regional, it's the bank, my regional bank in the US that I use. And I mean, it's just, I mean, it got crushed, and there wasn't, you know, I don't think there's a good reason for the selling, because it's just people are just basic, you know, they're just selling everything in this segment,
Mhm.
especially if it's regional. So I think there's some opportunities there. You want to be careful and selective, but definitely something to keep an eye on for opportunities is the banking segment, because I mean, we're not going to see a repeat of 2008, because for various reasons, but it's just a whole different different dynamic here with the, you know, with the Fed being very proactive, and you know, with banks being especially big banks being very well capitalized. You know, there's we're just not going to see a repeat of 2008, even if we do see, you know, like waves of defaults and things of that nature. Um, so yeah, opportunities there, opportunities in. I think there's a great opportunity in PayPal here. I mean, $60 for PayPal. I mean, this stock is just getting crushed like it's going out of business, and you know, it's not. And that's one that's one of the things that we look for in a stock when, you know, when we want to, when we want to when we want a good long-term buy and hold, we want to look for something that the market hates at the moment, but it's really not rational, because of course there's Google, there's Apple Pay, and then there's Google Pay or whatever, and there's other competitors, but they've it's nothing new, like they've been there. And PayPal is like, it continues to expand revenues. It's got an enormous number of users. I mean, it's a global play. So the management can use a shakeup, and I think when it does, we could see a sharp rebound in PayPal. But it's super cheap now, and I'm not like recommending it, or telling you guys to go out and go 100% PayPal, but it's just an example of a company that looks like it's just irrationally oversold, and it's a good buying opportunity long term. So
I have no problem with you recommending it, because it's trading as low as 6 years ago, so it's extremely low.
exactly, and like I said, it doesn't have any signs. I don't see any signs of the company going out of business, or even experiencing like a like a
No.
it's not even, the earnings aren't even declining. So I mean, it's
But
pretty
that's
crazy.
the same crazy thing that happened also with Baidu right now, because the
Got hammered.
results were positive, and they still get, well, don't get
Yeah.
the positive response in the market, let's say it like that.
Yes, and that's because Baidu is it's a Chinese company, and
Yeah.
and the market just loves to throw these companies up and down. They're like the new trading vehicles, I guess you can call them. I mean, the market just whips them back and forth, but I mean, there's no it's like it's like Benjamin Graham said, in the near term, the market is a voting machine, but in the long run, it's a weighing machine. So right now, it's just it's basically, I guess I want to say, maybe it's not that the near term price action, the volatility, it's not that relevant, because long term there's so much potential, and we recognize that the volatility is due to the to the challenging situation, to the current challenging situation we have with China, unfortunately.
Yeah, that's unfortunate, right? That's it.
It is unfortunate, but we had concerns earlier. We had serious concerns about delistings, and the Chinese companies not providing the the books for American auditors, but they got all that. They got it, and that was that. I think that's a really big deal, that they're opening up their books. I mean, that's huge.
Yeah.
So I mean, they got that. So that's a huge obstacle out of the way. I mean, we rallied on that for some time, but then, maybe the market forgot about that, and now it's more focused on Taiwan and things of that nature. Okay, but yeah, it's a difficult situation with Chinese stocks, unfortunately, but they have a lot of value. They had great returns last quarter, but this quarter we are seeing some challenges. Yes. And like with Baidu, we saw the great earning results. I mean, I put an article out. Baidu killed it.
Yeah.
But we saw a brief buying opportunity yesterday, and then the stock rallied, and it's day trading basically. But on the other hand, when we start seeing more confidence in these names, when we start seeing not day trading, but bigger investors come in, and more money start flowing into these stocks, I mean, we could see some very rapid appreciation.
Victor, now that you're talking about your portfolio, just a couple of questions, please.
Yes.
You've got a very small position in bonds. Do you intend to increase that, obviously, with the interest rate cycle potentially turning? Or is that just, what is that small, the
Yeah.
3%? Is there any reason for that? And also, what are your thoughts on crypto? Is it more of a trading type of, or you believe in the long-term positioning of 6% or 6.5% of money in that type of asset?
Yeah. So okay, that's another excellent question. So basically the allocation percentage, it depends on, on various factors. Um and one of these factors, of course, is the current market conditions, I guess. So let's start with bond instruments. Basically, these two bond instruments that I have here, they will increase as as uh, as yields go lower. So basically, we may be around a high here, and we have the market expecting lower rates. So I think now is probably a good time to look at these as a longer term position. And yes, I do intend to increase this position to about 5% of portfolio holdings. And also it's more of a, I guess, more of a hedging portion in the portfolio than like a direct play to, to make a great return on a bond instrument. It's more of a hedging mechanism, and also for it works for diversification. So
Yep.
that's the reasoning behind the bond instruments. And the crypto segment, that's another great question. And this one varies a lot, and it also obviously depends on market conditions. Right now, it's at about 6%, and that's actually on the lower end spectrum. Like if we look through prior, or if we go through, to through like prior sections of the all weather portfolio, I mean that when when crypto was near the bottom in like 2019, 2018, 2019 especially, that's when, I had like the bigger positions on. I had like 10-20% of the portfolio, in crypto, just because it was so low. And I was very confident that yes, that Bitcoin and, top crypto positions would go a lot higher, because, it's 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 the ultimate risk asset market, basically. That's how I can put it. It's risky, but you're not it's obviously much riskier than the stock market, and other markets, but you're not going to get the kind of returns that you will in crypto with any other market as well. So if you're in it at the right time, I mean, there's a lot of money to be made. Obviously right now is probably not the best time to be very heavy into crypto, because we can see, if the S&P and other major markets, if they go lower, we will likely see Bitcoin and the crypto segment head south as well. So this 6.5% position, it's actually rather small, and I have several positions here that they're basically long-term hold. I mean, I'm just gonna hold them like long-term positions, because I mean, I believe in a lot of these names. Like I've done a lot of research, into obviously Ethereum and other positions in the portfolio, like Bitcoin Cash and Chainlink and Monero. These are, I mean, they all have their applications, and they're actually quite interesting, what they can be used for and what they will be used for in the future, what they are used for now. A lot of people kind of shun this market, and they say it's too risky, or it's worthless, or Warren Buffett said Bitcoin's worthless, so why would I ever invest in it? But if you go back and kind of don't listen to Warren Buffett or you know, other people like Jamie Dimon. If you go back and if you look at, you know, how much money has been made in this market, you know, if you're in it at the right time, it's quite remarkable. And obviously, I want to be a part of that, and I want to capitalize on that when I can. So that's the reasoning behind being in that, you know, why we have that segment.
And the last sector is obviously the golds or the GSMs.
Yes.
That does that also vary dramatically based on the gold price, or
Yes.
is that a general positioning of that sector, or does it also?
Yes. I mean, that's another good question. So this segment, it's I'm a bit of a gold bug, I guess you can say, in a, you know, deep down. So
Yeah.
I like the idea of physical metals and the companies that mine them. I like that idea a lot relative to the constant monetary expansion that you know that we see. Because if you look, it's pretty constant. Like, I mean, it's almost always expanding. I mean, the Fed unloaded its balance sheet a little bit when it could, but you know, it was only by like 20% you know, at best. And then it just loaded it up like way more. But we, you know, nevertheless, like the gold price, it's, you know, it's around where it was at the high, like, you know, 10 years ago or even more, like maybe around 2011, so like 12 years ago. So something's not adding up here. And there's also, you know, there's also I don't want to get like too much into this, but basically gold and silver, they get shorted a lot, and also naked shorted by basically their prices get artificially suppressed in a way. And I've concluded that, you know, this probably can't last forever. It's lasted for a long time, but basically I have a lot of faith in gold and gold miners, and basically that once the Fed begins easing again, we should see. I mean, this is the sector that should benefit, that will probably benefit immensely when the Fed pivots. So that's why there's such a large position in that.
Excellent. Thank you.
You're welcome. I mean, since we're discussing like basically anything, and you know, we have 6 o'clock. Oh my God, guys. I'm sorry, but that's it. The hour ran out. I would go longer, but my wife is in there with the twins, and she's gonna kill me if I leave her there with the twins for too long.
1 a.m. in Australia, I can tell you that. It's a interesting time.
I'm in Greece now, so I spent most of my life living in the US, but I'm in Greece now, so it's 6 p.m. here.
Beautiful.
Yeah. In other words,
Appreciate your time, Victor. Appreciate it. And I think from where I'm sitting, we need to do this again because
yes,
it feels there's a lot to chat about. And as you say,
yes,
we are going from left to right through the markets. But I think all these individuals, it's nice to have a bit of a team here that we're looking into the same things. So
absolutely. It's like the core positions in the portfolio. We can call this the core team of the financial profit. Excellent. Yeah,
Thank you
no,
very much.
I agree. You're welcome, guys. It was actually my pleasure, and I had a great time. And I definitely think we should, and I don't just think, we will make this a recurring theme. We're going to I want to do this at least once a month, but possibly bi-weekly. So we'll see. We'll see how it goes. But I think probably in about 2 weeks we'll have some more stuff to talk about. So
Sure.
so we'll get another Zoom session going. Cool.
Cool.
Brilliant. Thank you.
Thanks.
Excellent.
Great.
Hey, it was a pleasure
Bye.
meeting everyone.
Bye.
Thank you guys. And
Cheers.
Thanks, Victor.
and I'll see you soon. Thank you guys.
Have a
Thanks.
great evening.
Great to meet you all.
Goodbye, everybody.
Thanks.
Bye, guys.